Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, August 29th, 2022. It's 10:18 Eastern Time as I'm starting the video, and I just want to go over a few of my favorite things, some of the things I'm watching and trading right now. Obviously, I'll start out as I usually do with the indexes. I'm going to cover we'll cover the big caps in this one to keep the video relatively short. QQQ and SPY. I want to do an update on crypto. Definitely want to update the precious metals, natural gas, wheat, and lean hogs. Those are some of the trade ideas I've thrown out lately. Let's start out here with the QQQ. We're on the 60-minute chart. This one just continues to play out very well to the technicals. There's that pivot right there on the 16th of June when the market's bottomed. Called for max upside target. Well, you got to look at the daily charts there for that. Oh, also this downtrend line. So I had a range, that little box right here between the 200-day simple moving average right here in blue and the 200 exponential. And the 200 exponential came in with the primary downtrend line. There's a downtrend line off the highs right there. And so we split the crosshairs. There's the simple and the blue line right there, and there's the red. And we went about halfway up. And so the box was my bounce target range, close enough for government work. Again, split the difference exactly in the middle there. And I have a little circle, and that was at what I called a bear trap, aka false breakout. And that was again a false breakout of the downtrend line right there, the primary downtrend line, the way I have it drawn off the December highs, because that's also when the S&P 500 peaked. Technically, you had ever so slightly higher high in the Nasdaq back in November, but it was for all intents and purposes an equal or double top high. And again, this is when the S&P and everything else topped right there. So that's our primary downtrend line, and we're below it. So the fact we popped above it and failed shows you that's a false breakout, aka bear trap, and nothing's changed. So what I want to do is just again, I try to do this. Get sometimes long-winded in these videos to make very clear my thoughts and what I mean. I have different terminology. Believe me, I'm a lot different than most other traders out there. I have what I called my initial pullback swing target, this primary uptrend line. That was hit in the pre-market session. I showed you that. So in the regular session, you'll see a hair above it. And so that's why I fired that post off to you. That, to me, was a time to, at least for me, to pivot, cover any and all remaining shorts, and start taking some longs right there. That was sell signal 1 on that little wedge break, sell signal 2 there, and so far it's been a nice drop to that trend line, about a better than 9% drop, almost 10, about 10 really. And again, I called it my initial swing target, little targets along the way, little areas where reactions are likely. You had a gap at that one, there's a gap there. There was our last objective short entry on the kickback into the gap. I gave you that red box as a bounce target zone. So congrats that sold into that or shorted into that, followed by that big drop there. So that's that. Let's see if we can continue the run. I want to point out here on this 60-minute chart we have potential divergence. Powell knocked the snot out of the markets at his speech at the Jackson Hole meet on Friday. To me and many others, it was 120% fully expected. The narrative, as I told you here, the narrative would change, and it did. Markets got giddy and started not only talking about the end of the rate hikes, but they were already talking about, there was a lot of buzz about Fed starting to cut rates and pricing that in, which is completely ridiculous. I told you, just watch commodities, watch the housing market, watch the economy, jobs, all that stuff. It's going to take a pretty good abatement in inflationary forces for Powell to pivot. Now, I've said it before. He's dovish by nature. He's going against his nature. But he ate a ton of crow with his ridiculous transitory thing, waiting way too long. So as bad as he already looks, and it's pretty much out there, the worst thing he can do right now is let off the pedal too easy. So again, he's going to be forced to keep tight reins on interest rates until we see a clear abatement inflationary risk. All right, so that's where I'm going. Is this was again an initial pullback target where I think we can game a tradable bounce but I have not wavered on my longer term outlook that bounce or not, we're going lower. I have longer term targets that have not been hit. We hit my third target. That was the last well, one of the last pivot on swing and trend, really trend positions, 401k type stuff. Said covered all shorts and went long there the day T3 was hit right there at the lows on the 16th, and started scaling back into shorts here. And as you know, this morning, covered those shorts for a bounce trade because that same target, the day that I pivoted here, all along this where we bounced to was my max upside bounce target. And so again, this is where I try to be clear on my my definitions and terms. This was my max near-term swing target right here, this trend line that was just hit in the pre-market session. And again, it's not my max pullback target, but I do think there'll be a tradable bounce. And I need to point out these potential positive divergences, unconfirmed. You zoom in real tight, take a look at the daily chart, go to the PPO. You'd have to make a bullish crossover here to confirm that divergence and start moving up from this level. And if so, that could give us a larger than expected rally. I'm going to tell you right now, I don't have a hard bounce target, but just eyeballing this. Let me go to a different board. I'd say that 312-ish level right there. See all these lows right here? That's a likely, and I'm going to call it my minimum bounce target now. So there's the trend line, and if I measure from here where we were, I remember we were a little lower. I have the pre-market trades turned off. That trend line, you can drag it. I have moved it around. It's here or there. I have it a little higher on this board. So where we were in pre-market, that'd be a bounce of about 3.25%. To me, a tradable bounce. I trade multiple contracts to the NQ. Even a single contract, you get 1%, even a half a percentage point is going to put thousands of bucks in your pocket. So I'll take a 3% bounce all day long. Now, there could be more. Right now, let's just play it by ear. We're not out of the woods yet. We look at NQ. I'm going to zoom over, and you can check out my comments this morning. Somebody asked whether it was Friday's post or this morning's about this whole my trading plan and what it is today. We had, as I pointed out, to potential bear flag. We all see what we want to see. I recognize that. I told you I'd be remiss not to point it out, but I didn't think it would play out. We're already very oversold, and more importantly, at my target. I have trading plans. I stick with those trading plans. I might be flexible. I might modify and sometimes change my trading plan, but I haven't wavered on where this rally would go to, which it did, to the 200-day, and where that pullback would go to, that uptrend line. That's where I plan to game a bounce. So we're not out of the woods yet. You can draw this like this, and maybe you've got a bear flag going that way now. It's still this flag right here. This area of consolidation is still proportional to the flagpole. You have three components to a bear flag continuation pattern: an impulsive move down, which is called the flagpole, and that's what this was. Then an area of upwards consolidation, typically on decreased volume, and then followed by a breakout. And then the measured target is the length of the flagpole added to the top of the flag. So that would be an ugly downside. Again, I don't think it's going to happen that way, and even if we broke to the downside, here I'll show you why. As I showed you this morning, you have the primary uptrend line on the NQ futures right here, the Nasdaq 100 futures, coming in just a little bit below. So, we had another down. That's excellent support. It's not only the trend line, but remember, this was a big level to me and still is. Remember back here we had these three distinct highs, and I told you on QQQ and NQ that was here, let me draw it out for you. I can't make all these other lines go away, not on this particular charting platform, but so you had that there in this uptrend line, and I said that formed a ascending triangle pattern, and there was your breakout and your back test, and we never looked back. And so that is, if we get another leg down today, which I'm pretty open to. I'm not all in long right now, not by far means. I even mentioned, I wanted to see this get foiled, but I will add to any longs on strength or weakness. Weakness down to, but not below that level. So let me show it to you on QQQ real quick. The comparable level. So again, the trend lines come in a little bit differently. That's why I use both the futures and QQQ. During regular session hours, obviously I tend to give a bigger weighting to the Qs. And also, the other consideration, I've said this many times over the years, if I am short of security, in this case I was going to come in, Nasdaq 100 futures, and I see QQQ hit a support level, but then that comparable support level, and that's, in other words, that trend line's a little bit below, and especially after a big move, when I'm getting close, then that's my final target. I'm going to cover on the first of the two. I'd rather leave a little on the table than get greedy, hold out for the second of the two, and see the buyer step in at that one, and then I miss a nice fill. In other words, the risk reward for the near term, for this swing trade, coming off the highs here, is no longer favorable to be short, or especially to take new shorts. Because again, like I said, started getting out a little early here of the shorts and scaling a little early long, but not very much. I said we sheared, use that term multiple times around this area. I said I think we sheared all the meat, or most of the meat, off the bone from going long here, staying long, pushing it pretty hard, and then starting to scale into shorts. And so same thing with this initial leg down. I think we sheared most of the meat off the bone. If there's a little more, we're back on the QQQ chart. Here it is. So here's the levels. Here are those comparable highs right there. 1, 2, 3 equal highs. That is that top of the ascending triangle pattern right here. You had there and there. There is your breakout. It was textbook. Breakout. It was impulsive. Everything you want to see. Successful back test. And boom. So therefore, if we do take out this trend line here on the QQQ 60-minute chart, you're going to come down there, and that's about 296.35, and that's also going to align roughly with that uptrend line on the NQ futures. So from where we were today, remember we hit that trend line in pre-market session, you're talking, as I told you in the post there, about 2%. So I'm not going to try to milk out, stay short to try to milk out an extra 2% and risk that we reverse here. That's just too much I'm seeing right now, including but not limited to these potential divergences there, and the fact that that trend line was hit, the fact that Apple hit the trend lines, its comparable trend line in the pre-market session as well. All right, let's not beat a dead horse. Let's just look at the S&P 500 SPY. Talk about that 200-day moving average. I'll turn off all the lines here. There's the blue line right there, 200 simple moving average. Look at that. It doesn't get any better than that. You check that 200-day, and the seller stepped in hard and didn't look back. So there it is. That's what your bear market rallies are. I talked about it in the past. Sometimes a 200 exponential does the trick, sometimes a simple. And I look at QQQ and SPY. And here, back here, SPY exceeded that level. SPY was stronger. Remember, and I told you before this even happened that don't try to match up this bear market with the previous one. This one's different. They're all different in their own ways, but this one is very, very much different than anything you or I have seen probably in your lifetime, but at least not for the past 50 years or so. This is the first time in history, or I'm sorry, the first time in over 4 decades where we have runaway inflation, the Fed's behind the curve, and they're entering an aggressive, early on in what's most likely going to be an aggressive rate hiking cycle. So the other bear markets in the past were valuation based, the dot-com bubble, the housing crisis in 07, 08, but they were different. They were rates were low, and they took them even lower then. So again, this is trade this bear market on its own technicals and fundamentals, and don't try to I caution you trying to pick points early on. I think that it worked out well, but then that's what I told you. I was focusing back here on those bounce backs on the Qs to the 200-day moving averages. We got 1, 2, 3, each and every one pointed out, and that did cap it. But see, this time we fell shy, and that's why I had a range. So that's it. So far, so good. Probably get a little bounce here, tradable bounce, and then I'll let you know when I think it's run its course. I do not, like I said, I give you a minimum target right now. Again, target these recent reaction lows there, and I'll kind of just play it by ear and see if it pans out. And if we crap out today or tomorrow and we come down here, I'll be a buyer all the way down to, but not much below that 296-ish level right there. Alrighty, other ideas. There's the equity markets for you. The semis, you couldn't play that one any better. Back here, bounce likely hit the first target. First of all, that was after reversing, being bullish and long, everything off the lows there, and told you that semis tend to lead the Nasdaq. They tend to move up and down more. If you're right on the call on the Nasdaq 100, you're going to get more bang for your buck in the semiconductor sector. It's more concentrated, a higher beta. We hit my first, second, and third target. When we hit that third target, I turned around, said closing that long out, and I eliminated that fourth target there. Thank goodness, because we never got there. Turned around, made it a short, gave you two targets. We hit the first target, so the bounce was likely. That's it. We got the bounce. And then today, again, in pre-market, not shown here because I turned off the pre-market trades once the market started, we hit that to the button T2. So you can't really game it much better than that. Now, that doesn't mean we can't go down, and I do think we will go down. From months back, before the market even peaked, I gave you some pretty aggressive targets that I'm sure many laughed at on the semis and on the weekly chart. That's T1, and it was already hit. We went about halfway down to my next and second target, which I still think is going to be hit. So again, right now I'm doing that thing where I'm speaking near term and long term, and they're different. Near term, probably get a little bounce off T2 reaction. So far we hit it in pre-market. There's been a tradable bounce so far. But ultimately, if this whole active trading thing's driving you crazy, and these whole near-term versus long-term target thing, and that's not your cup of tea, well, I'd say just set your stops somewhere up here. Depends again where you shorted, and sit tight because this is where we're going. I think we have another. Before this thing's said and done, another 30% downside in the semiconductors, but it's how do we get there? I don't want to ride out a 10-15% bounce. We could bounce all the way back here to that S1 R1. That means support resistance 435.83, and then go down. Like I said, my confidence on exactly how far we bounce from here, assuming that we do, is not very high. I just think that, like I said, play a little bounce off the initial tag of that trend line there. And crypto, I've been very, very adamant and persistent that to be long or bullish the equity markets is to be long and bullish crypto, and vice versa. And so not only that, I said I'm either going to be right or wrong on the call in the market, and therefore the right or wrong on the call in crypto. But if I'm right, then I'm going to make more money, or the crypto is going to go up or down more because it's a much higher beta instrument. And that was it. There's a bearish rising wedge on Ethereum, ETHE, and so far it's dropped 29%. So that's 3 times what the Nasdaq 100 dropped. Now, just like the Nasdaq 100, we've got potential divergence. Now, I say potential; it's not confirmed. Have to turn up that the PPO. And look, just like the equity markets, I could almost flip a coin, say whether or not we're going to get one more thrust down. Remember, to those levels I just showed you on NQ and QQQ, that's a good support level on ETHE right there, about 1048. You've got a gap right here, big old monster gap, another big old monster gap, two gaps there, one on both sides. That's a little island cluster bottom on the 60-minute chart, surrounded by gaps. And so that's a little target for you there. So if you're not long, if you're still short crypto because you've been short crypto with the markets, and you think we can get that one more thrust down, that would be a nice area to cover right there, at least for a tradable bounce. If the Nasdaq 100 and or S&P 500 or both hit support around the same time, those aforementioned support levels that I covered earlier. ETH, let's see, the crypto, that's the crypto itself right here. Same thing, 60-minute divergences. That's why you might want to be careful if you're short. Consider booking some profits, or even going long if you think we can get a good tradable bounce here. There's a downtrend line, there's a gap right there. And I also have the futures. That's what I've been trading, and that is right here, ETHUSDRR. Had it here, find it. That's it, ETHUSDRR. It's Ethereum in US dollars, and these are the futures. There it is, a gap backfill right there. No surprise, Nasdaq 100 bounced from the lows today, right off that trend line, and therefore so did crypto. Crypto right along with it, 7%, much higher than the bounce so far in the Nasdaq. But first resistance, we're at right now where we just kissed, which is the backfill of that gap here. I think you can see it there. Let me zoom in nice and tight in case you can't. So that's it. So we either, little dead cat bounce here, and with the market we take another leg down. Big support right there if we do. That's 1342. Um, and again, there's decent odds that that can happen. And if we do, well, again, I'll be a buyer there. But this may be it because the market, like I said, hits support. We have some divergences, and that would be your next target up there, 1637. It's a beautiful target because it's price resistance and the downtrend line right there. Okay, let's look at the shiny things now, gold and silver. But before I do, I would be remiss not to cover the dollar and the euro, and we're just going to look at this daily chart. The whole world has written off the euro. Everything I've seen, including Goldman thinks that the U.S., if we see a recession, is going to be very mild, but China and Europe are going to have it the worst. The Europe is garbage. I'm sorry, the euro is trash now. Dollar's going to go up forever. But look at this big divergence forming right here. Not that line. Let me take that line. Well, that I left that one there because it's flat line divergence here from here to here. That's why that line's there. But this is a double divergence on both indicators right here. And again, this is a daily chart. There's strong positive divergence. It hasn't been confirmed with a bullish crossover yet, but the PPO is starting to round out and flatten out. So if it continues, euro continues up, we're gonna get a bullish crossover. Big trend line. So this, what I just drew in purple, that downtrend line in this is a big old bearish, bullish falling wedge. But as I said before, when we got below it and we rallied to it and got rejected, and I talked about that, this would be a massive bear trap because that was big support about 10, a little around 104ish right there. It was here, it was triple bottom right there on the daily chart, 1 2 3. Then you broke it, and you didn't just meander on through. When you broke it, all eyes saw that. If you technical analysis, forex traders saw that break, sold it hard on the back test, perfect back test, rejected. And so all bearish until unless we can play out. Now I think it can play out because of the charts. These divergences are pretty strong. When you look at the weekly chart, again, this is as far back as you want to go on the euro, decades here, and you can see that was a major long-term support zone, which now becomes resistance. So that's what I'm talking about. If we can pop back above there, especially get above the bottom of the zone and that downtrend line, powerful stuff. And you do not want to be long the dollar if that happens. You want to be long the euro, short the dollar, and because there is a unmistakable positive correlation between the euro and gold, which is an inverse correlation between the dollar and gold, gold should do well. So we're going to look at that real quick. GLD daily chart, kind of just meandered around here. Let me turn on the lines. There they go. As mentioned recently, we had a breakout and a back test of this downtrend line off the highs, breakout, back test. We're just kind of floundering around there. But when I look at the gold futures right here, 60-minute chart, you have a nice divergent low. This is 60-minute GC, gold futures, positive divergence on the RSI, not PPO, but you do have it on the RSI. Sometimes you only get one indicator there. Reversal, and a little, so far, a false breakdown of that trend line we popped through there. So if we can build a little more, take out this high, that should be bullish and get gold up here at about 1825 in the near term. And then silver will usually follow gold, give or take. And here's what I'm looking at. So we broke down. First of all, let me add this. We have positive divergence, just like with gold on the RSI right there. We broke this trend line, very well defined. Why? Because you have a lot of reaction. 1 2 3 4 5 6 7. We had a little consolidation around there, a little flag, and we're back testing it from below. So a little work to be done, but if silver can come on up here and regain that trend line with conviction, then this whole thing right here, you have the divergence, and this whole thing will prove to be a bear trap, aka false sell signal, and then we should run up. I had a line right here. A lot of these lines seem to disappear on me lately. I had a little wedge right there that I had drawn before, and with a little divergence. But all right, so that's what I'm watching. And also look at it this way. You have these lows here. So silver has a support zone down around here as well. And So again, that's the work it needs to do. Take back that trend line, take out that previous high, and then 1963, 2330, 2033, 2034 right there, and then that high right there. Those would be your targets. Next up, Nat Gas. That one was highlighted in the video last week. One or more of the trade idea videos. Let me get to that chart here. Where's my NQ? Got it here somewhere. NG, I'm sorry. NG. Oh, a little whipsaw so far, but still pending. This is what I refer to as a BOD trend line. So we had the early sell signal on the break of the uptrend line today. 60-minute candle's not finalized. Let's see how we finish here. If we can finish back down on or below that, then that's good. And then there was that BOD level, or what I call benefit of the doubt, because we had price support just below the uptrend line. You can see that price support there at about 1893. So if and when that gets taken out, next stop 846, and then 7.519. Those are my targets right now. And you have this negative divergence right here on the indicators, so I laid out targets for you on both this and Boyle, which is the cold, KOLD, the 2 times short nat gas. Mentioned to you wheat recently, I think last week or the week before, or both. Liking that one. Remember, commodities had a lot of ag commodities had a little correction, but they're still in a bull market. So in bull markets, especially when you get nice little setups like this is a 6-month, 2-hour candle chart. You have a nice downtrend line. You have nice positive divergences that have been building right there on the indicators between price and the indicators. Price going lower, making lower lows, indicators higher highs. And then a breakout of the trend line, but this is where it should run. This is my BOD level. 824 and a quarter, and we're at 825 right now. So we'll just say we're at that resistance. Pop that. That's your next buy signal objective entry, and then pop 851, 851 and a quarter, and it should run 917 and a half, 1027 and a quarter. Those are my two targets. Again, just the way I like being diversified, because day to day, I'm not going to be right on everything. I'm going to, equity positions are going to go against me, or gold will go against me, and the more you have corn, wheat, soybeans, things like that have nothing to do with the stock market, and it's part of asset allocation and diversification. Works every bit as well in active swing trading as it does in investing. So that one long and strong wheat right now, and will be longer and stronger on the aforementioned breakouts. And then the other one, one of the other ag commodities I mentioned recently was lean hogs. That was that's live cattle. It was lean hogs, HE. There we go. Right there. And HE, it was pointed out as I gave you, I think it was the daily chart showing it at support the other day. Yep, there it is. 90.372-ish right there. It's price support. And then on the shorter term charts, was it the 2-hour, or it was the 60-minute? That was a head and shoulders up there. It was a 60-minute chart. And so not really running yet, but there it is. That's a nice positive divergence right there. Remember, at long-term support, and you can see that support right here as well. There's your positive AK bullish divergence, and there's your two targets right there. If it starts to run, you might want to hold out for that reaction high as well. But so far it's kind of up a little, but not much, but it's working its way up. And near term, it's zigzagging its way a little higher right now in the very near term, coming off that divergent low. There's a little higher lows and higher highs so far. So if we can continue that little zigzagging trend, it should work out something like that. And usually at some point, once you roll off a divergent low like that, and once it becomes clearer to the masses, you usually start to build some upside momentum. So it probably won't continue to zigzag in such a slow manner, and probably start to take off soon and hit one of those levels. And so that's it. So as of right now, cautiously long, covered those shorts on the indexes this morning at that final target, near-term target that is. Looking to game a bounce and then get back in for swing or trend shorts for the next leg down when the time is right. Still open to a little more downside, maybe another 2% if this rally fizzles out. It's really not a rally. We're still down right now in the Qs, so we recoup some of the overnight losses. But like I said, at most I see about 2% downside to the buyers step in if they don't, buy it up today and turn it around green today. It'll probably happen tomorrow or the next day. And then crypto's going to follow the market, and nothing else to add to that. Gold and silver looking interesting here with the euro. Nat gas waiting to see ideally that next BOD level get taken out, benefit the doubt support level for the next sell signal or add-on to nat gas. And then wheat and lean hogs long and strong there. All right, we're going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.